Hello, hello. This is Carl A. Smith, aka Dr. Cash, coming to you for our week of June the 2nd stock market analyses for our major indices across the board. Significant buying by the bulls. They are back in charge, but can this be maintained? We shall see over the next coming days. A lot of the price action that we saw across the board was driven by a little bit more stability on our tariff news from China and Mexico, but most of the action we saw was driven by the large institutions buying on Federal Reserve Chairman Powell's comments on a potential reduction of interest rates toward the latter part of this year, given our overall inflation concerns. We see in the S&P 500, which was up almost 4%, a huge turnaround in our buying and huge amounts of return on price action, roughly about 12 points. And we see a nice bullish engulfing pattern where we have taken back almost 2/3 of the action that we saw over the last month, with the added seller may go away has definitely been eradicated for the most part. But again, we will want to watch over the next coming days to determine if this can be maintained. It's a little bit light this week in regards to earnings, so we anticipate, again, a little bit of follow through, but not as much as last week. We have a target set of roughly about 290, where we will take profits on the S&P, given our entry down at the 275 level. We did reduce a little bit of risk going into the end of the day on Friday in the event of some unforeseen macroeconomic news coming out of the White House or out of the Federal Reserve. Now, we would like to see a little bit more follow through with a longer term target of roughly our value area high level, which is close to about 293. Now, we don't anticipate that coming this coming week. However, anything can happen we're just one or two tweets away and a few handshakes to the paper from a China perspective, but we don't necessarily see that happening moving forward. So we'll shift over to the tech-heavy NASDAQ that saw equally as larger returns, roughly about 4%, 7.5-point move in our overall range. However, we're coming up to support roughly about 181. We've seen large amounts of selling over the last few weeks, primarily driven by Facebook, Apple, Microsoft, Intel. Just this past week, Apple was up almost 21 points just by itself. So we are seeing, again, big institutions coming in to make purchases as the prices were very much undervalued given the larger sell-off that we saw for almost all of May. We do have a short-term target of our value area high, but we do have a nice break in the auction roughly at 184, this area here. So we don't anticipate us pushing through that this week, given we're relatively light on news, as well as the market has just moved very quickly in one direction. So we might see some institutions or medium-term traders taking some profits around this level. In addition, we do have a break in the auction, which could present a particular problem for those that are looking to try to continue to go long. So we are watching this area, which is roughly about $184. So we will see, and it coincides with our 9-week moving average. So again, huge amount of buying on the NASDAQ driven by Facebook and Apple and all your major FANG stocks. So we'll move on to the Russell, the IWM. We have not seen as large of a move given the amount of stocks that are in this individual indice, roughly about 2,000 stocks that are mirrored. And this is typically a indice that we look to kind of lead the pack across the board, given that it's mostly domestic companies and just a larger amount in the average. So we did see what we call a double bottom here on the weekly that coincided right with our support area, and we did take a long in the Russell, but it was a shorter term long that we do see some resistance at the 152 level that we will be keeping our eye on, and it does coincide with a higher volume node in our volume profile. So here at Carl A. Smith Holdings, we do use the volume profile as one of our key ingredients of our trading strategy. If you are unfamiliar with the volume profile, please don't hesitate to go back to listen to one of our previous trainings that we go at a high level into how we use the volume histogram to identify breaks in the stock auction to determine where there are support and resistance lines that are not necessarily visual to a traditional trading chart. But as we look at the Russell moving forward, we anticipate a continuation, but we're looking at potential reversal slightly around that 153 level, and we will ensure that we are hedged appropriately. Finally, concluding, we will look at the Dow 30, the DIA. Again, the Dow was back with a vengeance, as well as other indices. However, we did see a little bit of selling as we coincide with our 9-week moving average here. And we anticipate this to kind of continue with a slight pullback. We do have a shorter term resistance in the auction, roughly about 262, as well as it's lining up pretty well with some previous breaks in the auction where we have seen some shorts coming into the market. So we will want to kind of keep our powder dry toward the latter part of the next week and see if we can continue to see some strong potential results coming out of the tariff conversations. Now, we do anticipate if there are any agreements this week when it comes to tariffs, we will see some bullish continuation. That's what we're hoping for. As you know, the market goes up roughly 98% of the time. However, when it does go down, pretty much what we saw in May, it does go down with a vengeance. So this will conclude us for this week. Please keep your powder dry, keep your risk low, and it's your money, so it should be under your control. Take care.